Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday morning market webcast. Okay, so we talked about follow-through. We talked about what the bulls and the bears needed to do yesterday. I want to go right to the hourly chart. I mean, you can see here on the daily, we traded as high as 0575 yesterday. We've been up to 05. We just printed it actually before I hit the record button here. So we are testing the current highs. It will be interesting to see if we've got some kind of resistance area here. What's more interesting to me is whether 2900 goes support and we can lift up above and kind of go. You can see how narrow the hourly bands are. They are setting up the next large move in the tape. We didn't churn yesterday, although we did at times. My concern going into yesterday was we had a big move down, we've had a big move up. The market needs to breathe and take a little time and figure it out. Now, relatively speaking, we did churn. You don't go from 40 and 50 handle range days, to a 2-handle range day. With the exception of the initial move up off the open, we really just traded. We traded between 88 and 2905, which is under 20 handles, which for this tape is pretty tame. You look back at Friday, we traded basically from 2840 up to 86. So this range is muted by comparison. We've had a pretty flat overnight, although it's been steadily walked up. So when we get into the bell, does 0506 hold it again? Do we come back in to retest 95, retest this hourly midband, see where we stand, potentially retest the lows from yesterday down in around 2880? If that's the case, then if the bulls can't hold some kind of a double bottom scenario, then we start to slip back and the daily midband eventually becomes important, although it's a little deep for me. It's down at 2834. And you got the weekly pivot down here as well. The bears are running out of time to engage that weekly pivot, though. If this just wants to be a week that grinds slowly to the upside, then the bulls really just have to hold serve above 95 today, get above 2905, and try to close in somewhere in the 2900s, and then they can continue to progress into the end of the week. There's not a lot to discuss. The only thing I would talk about trade management-wise is it's very tempting to fight price in this kind of tape. And we did a few shorts yesterday with some success. It wasn't a huge day for us yesterday. It was about an 11-handle day. It was a pretty muted day. I didn't want to do a ton. We got into a couple of nice trades. We got caught near the highs and took one disaster stop, and then we got it back on and then some with the next couple of trades. But it's the kind of tape that'll make you overtrade. It's the kind of tape where you can start to get ideological and dig your heels in and say, we've gone up enough. This is enough. 2905 is enough. I mean, you look where we were last week, you look where we are now, it can't possibly go up anymore. Oh yeah, it can. And until the bears start to convert important areas, like the hourly midband, which you can see it's nothing but support. They'll play around with it a little bit, but they can't convert it to resistance, okay? Until they start to convert these important support areas, hourly midband, the roundy, even consistently on the shorter term, volume weighted average price, that all comes in around 95, 96 today. So, and until you are consistently making lower highs and lower lows, short trades are good trades, but they're still just rentals. I mean, we did a couple of shorts yesterday. We were short 99, we were short 94, and we made good handles on it. But when you get down into 87, 88 and it can't get through, you have to see it for what it is, which is support. All right. Everybody have a great day. There'll be more stuff out on social. Check that out. Come check us out. Trade them well. I'll talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.